Well, happy Tuesday, folks. I'm going to reference today as Fed Day. The reason being is the Federal Reserve's meeting today, and they're going to let us know if they're raising rates. The expectations are between 1/4 and 50 basis points, which is 0.5%. And I'm going to let you guys know shortly on what my expectations are and what the markets and the futures are telling us about. So without further ado, this is what's going on in the market. So I thought the markets were really going to be kind of hush-hush this morning. Look at the bonds right now behind us. The MBS, which is the bond that trades on Wall Street, that really is the main bond or instrument that affects mortgage rates, it's down 33 points. And my expectations for this morning is basically going to be at 0. So I don't know if there's some news leaked out, but we're going to find out. And I'll be live today at 3 o'clock to bring you guys up to date on what the Federal Reserve did and how the markets reacted to that. But you can see the 10-year treasuries, it's up a little bit in yield in the mortgage-backed securities. Here's the weird thing, guys. And let me point this out to you if you're new to the channel. If you look over to here, you're going to see what's going on with the 10-year treasury. Okay, so it's right in this region here. If you go over here, it tells you what's going on with mortgage rates. It's the mortgage-backed security bond that trades on Wall Street. Over here on the 10-year treasury, it gives us the yield. Then over here on the mortgage-backed security, it gives us the price. So don't be confused, because if both of these are, up and down or whatever, all I need you guys to know or understand, especially if you're really involved in real estate and mortgages, we're going to look at this number right here, the MBS, whatever the MBS says right here, and then we're going with the 6.0 coupon because that's the closest coupon to today's rates. So right now it's showing that the MBS market is down 30 bips. What does that really mean? Well, at the end of this video, I'm going to explain to you guys how this goes in and rolls over and how this is a big piece of what your mortgage rate is. And I'm going to explain what it is and what it does. But in the meantime, let's get over to what the markets are telling us. And there's kind of a conundrum right now, because yesterday I was talking about, is this maybe an effort by some of the banks or some bigwigs to possibly, I'm not going to say this, but I'll say it. Are they pulling something on us to make this a little diversion, or maybe people are making a lot of money in this sector or whatever? Follow the video and you're going to see why I'm questioning these things. So let's move through. The news on today is what the Federal Reserve is going to do, but with the backdrop of the banking system right now is kind of in very much turmoil. Let me put some ease to you on what's going on with that. And I know I've been beating like a dead horse for the last couple of days, but that's all the markets are telling us. Look, stocks rise as regional banks rebound. A Federal Reserve pause could mean damage in the world or whatever. Bank of America, recession fears. Yellen, she's the Secretary of the Treasury. She's saying, all the bank deposits are going to be covered. Okay, so in the news is basically everything that revolves around banking and interest rates, okay, and the Fed. So what we're expecting today is the Federal Reserve to come out and give a 0.25% increase in rates, the federal fund rate. So I think it's really built in at this point. If they go 50 basis points, I think the market's going to be a little shocked. If they do nothing, that might be a little bit built into this equation too, but let's go through the rest of the data that we have this morning to kind of come up with a little conclusion on what we think is going to go on. So we're seeing right now in the markets, you see the S&P is up, the Dow Jones is even up over here at 250 points. It was up a big yesterday as well. The Nasdaq's up 127. Basically all the way across the board, everything's loving the news. What news? Banks are going out of business. Okay, if that's the news, it's not good news. Okay, so then you go down through here and bank mergers was the right move and all this other stuff. So it's all about banks. So I'm going to give you a little bit of caption on banks here in a second, but let's flow over to some of these other areas. Bitcoin. Is Bitcoin a safe haven for the banking system? No. I'm going to come out and say no. I'm not a FOMO of Bitcoin. I like Bitcoin. I think it's an instrument that'll be around for a long time. Do I think it's going to be mainstream currency? No, that's my thoughts. Maybe 10, 20, 30 years from now, it might be. But right now, it is way too volatile. If you go over here, you can see right now, Bitcoin. It's just a little bit ago, I was doing my research. Bitcoin was at 28,103. Now it's 27,960. So it's all over the map. Okay, so it really can't be considered a stable currency because nobody's going to want to get paid in Bitcoin when the next day it could go down 10 or 20%. Okay, so that's my take on that. You guys, you should have the same take, because if you look at this and, that's how you get paid. Do you want that but much volatility in your income? maybe it's a nice investment or an investment tool that you could use to maybe diversify a little bit of your money. But just to let you guys know, I'm not a licensed broker. I don't do this for a living. I'm not advising you what to do. I'm basically doing this for educational purposes and letting you know, guys, what I'm doing on the background. Just like a lot of CNBC and Yahoo and Bloomberg commentators do. They come in and they have these company owners come in and just pump their stocks. Well, I'm just talking about some of the things that I do and some of the things I want you guys to do your research on. Credit Suisse merger was the right move. YSVB Bank could bring troubles for the wine industry. And then you have all kind of other stuff. So right now we're seeing the markets liking things. Cryptocurrencies not crashing. Gold's doing okay. And oil. Speaking of oil, on my way in this morning, on my way home last night, and I know oil is kind of my pet peeve, but on my way home last night, gas by my house was $3.39. This morning, I actually took a picture. I think it was $3.79, something nuts. Let me see where it is. So I don't know if $3.77. Let me see if you guys can see that. Let's see if you can do that. You can't see it, but it's $3.77. Okay, you can kind of see it in there. I took a picture of it. So it went up 10, 12% overnight. Well, what in the world is oil doing? Well, let's go over to here. Oil is doing, where'd I get it? Oh, man. Here, I'll get it in a second. Oil's actually down, but I'm going to CNBC. I know I kind of boycotted CNBC for a while, but they do have some data that I need. Okay, now let's go through here. Well, let's talk about housing because this just popped up on the screen. It wasn't me that's doing it. If I go back, it might be gone. So let's address this real quick. Home sales spike 14.5% in February as the median price drops for the first time in over a decade. Well, let's put our mind around this one. Okay, remember a lot of mainstream media and everybody was saying, if rates hit 4%, it is over for the housing market. Okay, that was in 2019, 2020. Okay, then rates started going up, and then last year they went bonkers. That's a channel that you guys might watch. But a lot of these people were saying, the market's the housing market is going to crash. Okay, this is a specific area where I tell you guys you need to pay attention to the words that people use, because if you say, well, home sales are plummeting, just plummeting, they now can't use that terminology because home sales were plunging. Sorry about the English there. That means sales. So the number of sales are plummeting. Yes, it happened. Okay, it's happened especially last year. But people kept saying the housing market prices are going to crash. Okay, we haven't seen it. Now we're seeing it finally starting to crack. So the people that have been on this bandwagon for 2-3 years, they kind of missed the boat because most houses appreciated probably in those 2 years, probably 20 to 30, maybe in 40% in some areas. But we're seeing for the first time in over a decade that house prices year over year are down, and they're down 0.2%. So I haven't said it in my prediction for this year or my estimates for this year. If we see a recession, we're going to see probably a 10, maybe a little bit lower valuation in homes. If we don't see a recession, we might see a stagnation of about 5%, maybe 10% as well. And then you're going to see by the end of the year, things start to pick back up because the expectations on the interest rate front are the Federal Reserve is going to pause and maybe even pivot by June. Okay, we're going to get to that as well. But again, you're seeing all over here, the stock market's loving a lot of the data that's out today. But that was really cool how that just popped up and now it's gone. So I'm glad we were able to pop in right there and then to see that alert. Let's go over to some of the other things. Here's the area that a lot of people are saying, oh my goodness, look at the bank stocks. Well, here's what's happened to some of the financial stocks just in the last couple weeks. So you can see on here, total returns from March 7th to March 20th. Let me get my head out of the way and let's look at some of these, what happens to some of these bank stocks over the last 2 weeks. You can see right here, West Alliance Bank down 59%. Comerica down 32%. These other companies, look, they're down 20, 30, 50%. Okay, but then if you start going to some of these areas here where you look at, what's really happening with some of these stocks, look at some of these bank stocks. And I just start posting this. I'm making a kind of a wish list on here, a watch list. Look at some of these banks, what they're doing right now. Signature Bank, which is still in mayhem right now, they're down 22% today. But look at this. Look at First Republic Bank. Okay, they're up 36% today. This is the bank that the Jamie Dimon is coming in and putting a group of people together to rescue this place. They're going to make a lot of money. A lot of money. Look, just today, this thing's up almost 40%. Okay, this is really what I want you guys to be concerned with, because is this, I won't say it's staged, and I know there's issues in the banking system, but guys, we have banks that go out of business. Every year, usually some banks go out of business. Here's the FDIC charts that show you banks that have gone out of business. You really have never heard of these. I bet you didn't hear back in 2019 or 2020 any of these banks that went under. So we have Signature Bank right now. These are the two in the headline, Signature Bank and Silicon Valley Bank. Then how about Amina Bank, a state bank, back in October of 2020? Did you know that went out of business? They got shut down. How about First City Bank of Florida? Did you know they went out of business in October of 2020? You probably never even have heard of these places. That's my point. So now why, if you look at this and you say, okay, a lot of the regional banks were a little stressed as it is because the group they invest with or who their depositors are with, but they bought treasuries, they bought a lot of other things, and still, until it's really discovered that they did a lot of fraud on their investments and they did a lot of risky investments, why was there a run on specific banks? Well, if you look back, there was Twitter feeds from big hedge fund guys that saying, we're pulling our money out of there. Why would they do that? Why would they do that? Okay, so now are these the same guys maybe pulling their money out and then going back in on the other side, picking up some of these stocks at a discounted price? I'm not saying that's what's happening, but it sure looks like, when you go through the banking sector, again, through here, and you're seeing all these stocks down 20, 30%, 50% in 2 weeks, and then you start really digging in on them to watch the wish list. I'm going to add all these to that so we can monitor this for the next couple weeks. If you have some of these stocks now up almost 40% today, it makes you just kind of sit back and say, what's really going on? Okay, so that's that part of it. Let's get to the other piece of things. What in the world is going to go on with interest rates, especially today with the Fed meeting? Well, here's what we're going to see. This is actually a publication by the Federal Reserve. You can see that right here, Federal Reserve, the Bank of Atlanta. If you go down through here, this gives us a reading on what's expected from the Federal Reserve. So you can go through these charts, but here's the chart right here that's interesting. You go down through here, and they're saying in March. So for March of this year, the expectations are there's going to be a 25 basis point rate hike. You can see that up there, okay? Probability, 97.51. Now look at what all of a sudden happens possibly at the next meeting. You start going down through here, and now here's what's starting to take place. Okay, now the probability is a little bit different there. Okay, but one area that's there that we really need to focus in on is what the expectations are going further out. So if you go further out, there was the expectations are, well, there's supposed to be some price cuts, and this chart actually just refreshed just a little bit ago. So my apologies. What's supposed to be happening is the Federal Reserve and most of the futures funds and everything else is telling us by June, July meetings from the Federal Reserve, they're most likely going to pivot. Okay, so the conundrum on this one is, do they do nothing or 25 basis points? That's where I'm in the realm that they're going to do 25 basis points because they really can't do anything, because if they do that, the whole system is going to say, okay, now what? Are you kicking the can? The next meeting you're going to do 50 basis points if all this bank stuff actually works out okay, flushes through the system over the next couple weeks, which I expect. I don't expect regional banks in general to have issues. You had Silicon Valley Bank, that they had a lot of depositors that were startups and investments firms. You had Signature Bank, was a huge cryptocurrencies. Hell, they might be solvent today with the way the Bitcoin's going. Did you know Bitcoin is the top investment so far this year? It's up over 20, I think it's up over almost 20% just in the last week. So that is an area that people are starting to focus in on. And then I'm also going to start concentrating on gold to give you guys an idea what I think is going on with gold. But with interest rates, I think today the Federal Reserve is going to do a quarter point. I think that's kind of baked in. But my issue right now is basically this: the markets. The mortgage-backed securities market is reading in something. Now, this probably will go to about zero right before the Federal Reserve announces what they're going to do, and then from there it'll move way up, way down. I don't think this is going to go sideways. So let's go over to here and see what MBS or Mortgage News Daily has. They're reading right now. The MBS market is down 34. So what are you seeing on here? What is the MBS? So for those new, I'm going to go through it real quick. For those the older people that watch me on a daily basis, hang tight just a second because I want to conclude with something. So what the MBS market does is this is a bond that trades on Wall Street. You can buy it. You might have it in your investment, any of your investments or your 401k. All I need you to know is if this number goes down, the price of this bond goes down, there's an inverse relationship with the yield, meaning rates go up. So this is going to probably see maybe a 0.1 adjustment to the bad with mortgage rates. So I'd see mortgage rates going up about 0.1 or 0.125 by the time they get posted today. But where did they end yesterday? Well, right here. The Mortgage News Daily surveys mortgage lenders all over the country. They send in their what their rates are on a specific area that the Mortgage News Daily is asking about. And here's the rates. These are the top 6 products people use when they're getting purchasing a home or refinancing. Now, guys, these probably aren't your rates. Okay, it might be in there. What I want you to pay attention to or understand is the adjustments. So this 6.675 rate isn't yours. I'm almost guaranteed it's not your rate, the rate that you're going to get, because your loan is basically unique. How much money you have down? What is your credit score? What kind of property are you purchasing? You know, it's soon to be, what's your debt ratio? All these factors go into your mortgage rate. Okay, so what I want you to pay attention to is this, just the direction of what rates are doing. Because if, like today, if rates just today from yesterday to today are up 0.12, this is actually 0.125, it's up an eighth. Well, you know the rate quote that you got 2-3 days ago, if you didn't lock in, probably went up an eighth. So did you know we have rate locks that go out to 6 months? I wouldn't suggest that because I think rates are going to come back down by right now. But if you're buying within the next 30, 60 days and you found a house, well, let us know because we can help you try to scan the whole country to find the best rate in town. If you haven't found that house yet, let us know because we can actually lock in a rate for you guys while you're looking for a house. Did you hear what I said? While you're looking for a house, you don't even have to have a house picked out yet. You just have to, the duration of time we usually go is 90 days. So within 90 days, you need to find a house and close on it. Usually takes us 2 to 3 weeks to do your loan. So think about it. You got about 2 months to find a house and then a month to get into that property. So if you're in need of a mortgage, if you're looking to get pre-approved, how much can you qualify for? Is a reverse mortgage right for you? Or can I do a home equity loan, maybe to pull some of that equity out of my house because it had such appreciation over the last few years and I'd like to pay off some of these high interest rate credit cards that the Federal Reserve keeps raising rates on? Please check us out at therateupdate.com. We'd love to help. Thanks for watching, guys. I hope you find value in my channel. Please, if you do, give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert because remember, Wednesdays we do a live event, Wednesday evenings to answer all your questions when it comes to buying your first house. So thanks for watching, guys. I'll be back today at 3 o'clock live. That's Central Standard Time to let you guys know how the market ended and what the Federal Reserve decided to do and how that ripple effect went through the markets from bond market to stocks to gold and crypto. So thanks again, guys. I'll see you at 3. Bye-bye.